Everybody has a picture in their brain about money. And the most important part of a wealth plan is really understanding what money means to you and what is it that you really want to accomplish.
Each financial decision is not in a silo by itself. It has to be looked at and how it relates to something else in your plan. And most people are not looking at the big picture.
This is John Smallwood, and I want to welcome you today to my new show, Money Isn't. This is something I've been doing podcasts in various formats. I've had the Wealth Curve Talk. I've had Wealth Curve Financial Pressure. And over the years, the purpose of the show was to take complex ideas and make them simple, okay? To distill them down, to get rid of the opinions, get rid of the biases, to distill it down to more factual-based concept, right? And what we've been figuring out is, over the 34 years that I've been doing this, not podcasting, but doing wealth management, okay, is money and the definition of money is really different for everybody that we're interacting with. And what money means to you is different than what it means to your neighbor, okay? Your understanding, your knowledge, your connection to money, okay? Your beliefs about money, okay? And what's funny is when we're in the financial planning process, right? We run a really great practice. It's called Smallwood Wealth Management. We're primary offices in Red Bank, New Jersey. We work, 16 to 20 states. I'm not sure what it is at this point, but if we're not licensed in your state, we can, okay? What's interesting is in working with these people for all of those years, you see certain patterns that evolve. You get comments back that I wish I did this 20, 30 years ago. I'd be in a much better position. I've heard this is better than marriage counseling, okay? Numerous times. I can't seem to adjust that in my own plan, but, married for 29 years, but it is. But what the reality is, money, when you say money, everybody has a picture in their brain about money. And the most important part of a wealth plan, of a financial plan, of a financial strategy is really understanding what money means to you and what is it that you really want to accomplish, all right? So money is a commodity and it's a concept, right? And when I say commodity, money, a dollar, okay, a US dollar is a commodity. It's a promise. There's nothing backing that currency. Years ago, we were on the gold standard, so gold backed our money. Today, it's simply a promise, okay? And that commodity, like every single commodity in the world, when I say commodity, could be oil, could be, it could be water, it could be, kerosene, which is a derivative of oil. It could be gold, it could be silver, it could be wheat, it could be barley, it could be, those are commodities, right? And those things go into certain manufacturing processes, right? But a commodity is subject to erosion principles, right? There's inflation, there's devaluation, there's all kinds of, there's taxes, there's all kinds of things that are going to change the value of that commodity over time frame. It's either going to make it more valuable or less valuable. And when you think about money, when you think back in history, going back hundreds and thousands of years, money is a way we're exchanging goods and services back and forth between us, right? And money is something that right now in our economy, we're storing wealth in the form of dollars. I'm focusing on the United States, right? But what you're doing, you're exchanging commodities in the form of dollars, right? So that thousands of years ago, you stored your money in, diamonds and jewels and gold, and then you built a castle, right? And that castle was a format of your value. And then you put a moat around that castle to protect people from stealing your money, right? And then you might bury it. You might put it on a ship, and a pirate might come take your gold, right? And funny story, years ago we were doing it was a Mother's Day thing. It might have been a Father's Day thing. Probably, I think it was a Father's Day event. And we had all the kids, and the kids are like probably 6 or 7. Actually, the oldest was probably 7 or 8, and down to like 4. And actually, Eve was here, so Jack had to be 10, 11. Eve's got to be 2 or 3 at this time. The nephews and everybody's here. We're at my parents' house, and they lived on the water. And what we did is we had all this pirate stuff. We were having a pirate day. We had this small little boat, inflatable boat. And earlier in the day, I went over to the island across the way, which was probably 400 yards across the spans there. And I buried a fake treasure chest. And we came back. I got the kids, and we're like, okay, I made a treasure map, and we put it on the thing, and my mother made it there. And we get in the boat, and we go to the island, and they're following, like there's a buoy you got to go to. And then they're looking on the beach, and there's a boat that was sunk, and 30 yards from the boat sunk, 30 paces, their treasure chair, you're going to find an X. And we get there, and they start digging, and the treasure was gone. Somebody saw us bury the treasure, and they took it, and it was gone. And it was the greatest thing, like theft and identity. And we realized that when there was a boat that was anchored right offshore, when they saw us looking for the treasure, they picked up the anchor and they left. And we're not talking anything valuable. We're talking, plastic jewels, right? So my point of this is that your money, the way you protect it, people would bury it. There'd be a map. You would have chickens in exchange for something else, right? Money has evolved over time frame, right? Money is now in real estate. It's in, Bitcoin. It is in commodities. It's in individual stocks. It's in your 401k. It's in your bank account. It's in your house. It's in life insurance. It's in all these different things. And these things become money, and it becomes very confusing. And money over time is going to change as the economy in the world progresses, and the exchange of that money is going to change. My grandfather, who grew up in North Carolina, our family down in North Carolina back in the day had, they had a lumber mill in downtown New Bern, North Carolina. They had a lot of things. And then the Depression hit, right? And what was extremely valuable became unvaluable. And his father had, rather than working in the lumber mill, became a doctor, okay? And because that was a noble profession for what they were, trying to do is, get out of the lumber mill and become a doctor. And it was a great thing. Well, during the Depression, my grandfather told stories, because he's no longer here, about he would exchange chickens for medical advice and medical treatments because they didn't have food to eat. Now, my grandfather was supposed to follow in his footsteps and go to medical school, but there was no money to go to medical school. So he started to do fishing, which was a really big thing in North Carolina on the rivers down there on the Neuse River. There's a fish that's called shad that's used in multiple different things. So he borrows money to get a boat to fish for shad. And that year, the shad didn't run in the river. So he didn't have a harvest for that season. Like there was no shad. So he was out of money. He owed somebody a lot of money for that boat. And he ended up going to work on a ship in the engine room. And that was going around the world. So he got on the ship and he spent the next 30 years working himself up from the engine room all the way up to chief engineer of that ship, and ended up, based out of Hoboken, New Jersey. And that's how we happened to end up here in New Jersey, right? So the money, 20 years earlier, money was, no issue to the family. And then economic forces came, black swan events, whatever you want to call it, and it changed the nature of what was valuable and what wasn't valuable, right? But what's interesting is the perception of how you perceive that money or the lack thereof money or that event is other people capitalized on that same event. So one person gets run over by the event and the other person becomes very wealthy in that time frame, right? So what I want you to be thinking about is, in this show, Money Isn't, we're going to do it differently than what I did in previous episodes of Wealth Curve Talk, right? We're going to take industry experts, people that are business owners, and we're going to provide interviews about their journey from working for somebody, creating their own firms, and getting out on their own and going full cycle. Some people are mid-cycle, meaning when I say full cycle, opened a business, built a business, sold the business, sitting on the sidelines enjoying their wealth, to people that are doing it live now. We've got a lot of really fantastic stories of that. And what we want to do is I want you to understand, the struggle, the things that made them successful, the things that if they could redo it, how would they approach it differently, right? And really understand from their journey what was important about that. We're also going to take clients that are not entrepreneurs, and we're going to talk about their journey in wealth management also, because I think this is really, really important, because how you're working and how you're dealing with money and how you're treating money, there's so many insights when you have a great conversation about wealth, right? Then we're going to basically take so you've got people that are maybe clients, maybe not clients, their journey, very successful. We're going to take industry experts. We're going to do some interviews to take very complex problems, or strategies, and distill them down into as simple language as we possibly can to provide education and content, right? Then we're going to take the client journey, and then we're going to take concepts. There's going to be, 20, 30 minute, 40 minute presentations where on the YouTube channel, there'll be very good visuals of what we're trying to provide from an educational standpoint, concepts that we think are not necessarily in your best interest, that are being portrayed out there by the financial industry as conventional wisdom, and that you should follow this direction, okay? And the big thing that I'm really, really passionate about in wealth management is most interactions with financial advisors is based upon some sort of product, right? The solution to all of your problems is going to be this magic bullet of a product. If you stick all your money in this product, you're going to be successful. And the answer to that question, or the answer to that statement, or the statement around that statement, all right, just to have fun here for a second, that's not true. you know that is not true. The forces that are making that attractive and appealing right now may not be appropriate 3 years from now or 5 years from now. And what I want you to focus on is you have a dream about your money. I need to understand my team, your financial advisor, whoever you have guiding you, right, in your money decisions needs to understand what those goals and dreams are and what you want to accomplish, and then creating a strategy of how you reduce taxes, how you reduce risk, how you reduce fees and costs, how you increase savings rate, how you increase protection, how you fully enjoy your wealth, and more importantly, how do you pass the maximum amount of money in the most strategic manner that doesn't just give people money for the sake of giving them money, okay? But it gives them the tools behind that money, the thinking, how it was made, how you make money, how you keep replicating, because money in a lot of households isn't discussed. It's like, we don't talk about money. What is that? Like, why not? Why aren't I talking about money and how to make money and how to save money and how to create money and how to be in control of my money as opposed to a victim to my money, right? So as we do this show, the show is going to have a lot of different, it's going to appeal to different people at different times and different spaces based upon this journey that you're on, okay? And the lessons that I want you to have is the most important part of a plan is that goals and desires and dreams that you have, and then structuring the macros in the plans, right? I have a book, it's called It's Your Wealth, Keep It. It is an Amazon, or it was an Amazon best-selling book, #1 in retirement planning, #2 in wealth management. We launched it during the pandemic. It is a guide to help you see the journey, right? That book is something that it's another layer of education helping people get to the next level. And in this journey, what you want to accomplish is when I get those savings rates down and I knock my tax rate down to the smallest amount that I can possibly do. So right now, the way we live, we've got money flowing into us, right? And that comes through our paycheck. And through the paycheck, there's a whole bunch of leaks happening in the paycheck that I got to tell you, 99% of the people have no idea what the hell's coming out of their paycheck. They don't know what's coming out of it. And one of the first things that you want to get really clear on is, okay, what are these things? And are they adding value? And am I maximizing the values? Let's say you work for a large corporation. What are these things that I'm paying for, and what economic value am I getting for it, right? Just because it's coming out of the paycheck doesn't make it bad. It could make it really good, right? There's money going into 401k. There's money going into 401 Roth. There's match money. There's bonus money. There's, HSA accounts. There's, all kinds of things, flexible spending accounts, right? Pre-tax, post-tax, right? There's so many things that are coming out of that payroll. And once it hits there, how much money is going into savings, okay? And then how is that broken up into multiple ways to save to minimize taxes? And when I say minimize taxes, it's not just this year. It's every year in perpetuity, right? And then it's looking at last year, how did your taxes happen? And if you're a business owner, you get to see how the business lays up into your personal return and how the personal return affects the business return. And you have a little bit more fun as a business owner because you can control a balance sheet for the business and then a personal one. So you have a lot more opportunities. But most people that we encounter, whether you're a W-2 employee or you're 1099 or you're a business owner, or you own a C Corp, an S Corp, an LLC, whatever it is, most people are not maximizing the tax benefits that are available to them, which means they're paying more taxes than they should. And when I pay more taxes than I should, that means I most likely have an opportunity cost, unless I really enjoy paying those taxes, right? There's a thing in economics that's called the marginal utility. In better terms, it's called utils. How much enjoyment that you get for something is a measurement, right? So if I have something that's coming out of my credit card every month and I have no idea what it is, let's say a streaming service, right? And I add up all the streaming services and it costs $38 a month, but I don't watch any streaming services. Am I getting any benefit, any utils, any enjoyment from that? It's just lost, right? So I pay Uncle Sam an extra $5,000 in taxes. Is that good or bad? It's feedback, but I think it's really not in our best interest, right? Because not only have I lost the $5,000, I've lost the future value of what that could be. If I give it to the government, how much am I going to get back? Nothing. So 100% loss, right? 100% risk, right? If I can recapture that and put it back into my plan, that's found money. I could actually take a lot of risk with it. I could buy small cap stocks, which is, historically, all the mega caps were small caps at this moment, right? So historically, the risk is, there's not that much more risk. So I could put that money to work and make a lot of money on that. And let's say you're doing this every single year for the next 20 years, paying an extra $5,000. How much money have you wasted? And what we're going to find out is when you think about your plan, there's not like your income and all the withdrawals out of the paycheck, the taxes, where money's getting saved, how the fees are being impacted on that, your debt structures, whether they're deductible or not deductible, whether they're high interest rates, are they short pay, long pay. Then you got all your protection decisions such as life insurance and disability insurance and car insurance and homeowners insurance and umbrella liability and long-term care and a myriad of other stuff, right? Am I getting maximum value? Am I paying for those things? And then I got my lifestyle, which a lot of people that I've encountered in my 34 years of doing this feel like they're victims to their lifestyle and they can't save any money because their lifestyle is dictating what's going on. And I want to dig in that and just say, there's so much waste. Like literally when clients come through the process, not all, because there are some really good plans out there, right? So you can't promise this. But when you see what's leaking out of the plan, like if you make $100,000 a year and you pay more taxes and you don't save a lot of money and there's money going to all the lifestyle and all the things, if you reorganize it and you can bring back $2,000 or $3,000 and put that into your savings, what percentage increase did you get in savings? And if you don't see it in your plan, you're not going to see it. And our job is to help you see that, right? But money is not something, well, I just put it in a bank, or I put it in a CD, or I put it in a mutual fund or an ETF, or I put it in a piece of real estate. And it's not like magic dust that I sprinkle and it's going to work, right? It needs to be nourished. It needs to be watered. It needs to be weeded out. Like the garden needs to be cleaned up, right? When you think about your money is under attack. Your dream is under attack, right? Because taxes, transaction costs, fees, all this stuff is coming at you, right? The job is to understand where you are, right? But the money is where you're storing that capital. Deferring enjoyment to a spot in the future where you're going to enjoy more of this money because you're shifting from working to living off of your assets. Some people can do it a lot sooner. Some people can do it a lot later. Some people never actually make the shift into the retirement side, right? One of the wealthiest individuals in the world at the time of this recording is still alive, and he's in his 90s. And we all know who I'm talking about, right? But the age of 56, which is my age, he was a billionaire. He could have retired, said, I'm going to go sail around the world. He did that anyway, right? But he kept on working. And I know next week, he's doing a Q&A for 3 hours on a dais about his company and all the questions that people want to ask him. And he's 90-something years old, and he's still growing his wealth. When you think about compounding money, all right, I'm not sure what that, I think it's close to 100 billion. I'm not sure what it is at this point. I didn't fact check myself, so please fact check myself, right? Concept is what I want you to get. The facts really don't matter because they're going to change, okay? But the concept is he took $1 billion and turned it into 80, 90, 100 billion. And that happened, he's been doing this for 90-something years. The most of that wealth, the bulk of that wealth happened on the back end of that curve. If he broke his curve or had too much tax paid during that time frame, or, cashed out his chips and, did something, he's breaking his wealth curve potential. Now, to me, there's a fine line, right? Money has to be balanced. It's not like people come in and they won't spend any money because they're afraid of something. They're afraid of running out of money. Their money won't last. And other people come in and they spend way too much money and they don't save any money and they're never going to have any money. The financial plan is not the problem. What's going on between your brain is the problem. And what we want to do is we want to communicate that. We want to understand what that is and basically get to the proper balance. So all those macros that I was talking about, income, taxes, savings rate, the protection, the lifestyle, the house, all the things that are defensive in the plan need to be in a proper balance, right? And when you put it in a proper balance, the plan is going to work. More likely than not work. If it's out of balance, it could work really, really well because you're accumulating a lot of money. But if you're not having any enjoyment, then I wonder why we're doing that. Okay. So money, as we sit here, what I want you to understand in this intro, quick, short conversation is that when you interact with your money and you store it, you're making decisions that are the most important thing that are going to dictate where you are in the future. And the sooner that you understand the eroding factors and where they are, the sooner you're going to get a better plan. All right. So this is going to be fun. I'm really looking forward to the list of guests. We have a list of guests. We're going to be organizing them, putting them out there. We'll be having this, there'll be different smaller versions on the YouTube channel. The podcast will be on the YouTube channel. But there'll be shorts. There'll be things that we're trying to do to provide that education. And my goal is for this to be the go-to resource for you for complex issues and really in-depth strategies. And as always, you can, on our website, you can basically put a form in and you can ask us a question, or you'd like to hear more about this concept. You want to, hey, this is a strategy that's going on. I don't know anything about it. I can't find any decent resources that aren't biased, etc. And I want more information. Can you direct me to where that is? Can you get a guest speaker on it? Can you provide more content? And the answer to that question is we will do our damnedest to actually do that. So I'm looking forward to this. Thank you.